All right, guys, here's how you change volatility on a Thinkorswim Analyze tool. So let's look at a possible hedge type play. Around 30 days out, let's say we want to buy an ES put in case volatility shoots up. And you can see how this will profit pretty well, even if the stock price doesn't get down to say 47.20 or so. So I'll just pick the 0.02 delta, costs about 3.25 or so. Then you're just gonna right click analyze trade. Already had one up. Let's see that one. And as it is now, the T0 line, the purple line, is showing the profit based on just stock price. But if we go to the vol adjust right here, you could change the different numbers. So let's say volatility went 50%, type in 50%, see how the curve shift up. As volatility increases, that T0 line is going up. And you also could predict like what happens if it's within a certain day. It'll be this one here. You can see as we get closer to expiration, that purple line is going to get close to the green line. But let's say we're about 12 days or so. The volatility went up 50%. Even if the stock price, which ES is currently at 5,500 or so, even if the price is around here, you would be showing a pretty large gain, about $5,000-6,000 here if the volatility, went up quite a bit. More reasonable might be say 10%. And then at 10%, you'd be up about $102 or so. This is 2 weeks from now. So again, look at that purple line that shows the pricing based on a date with the volatility.